Thank you everybody for being here today. I can't imagine a more different presentation from Andrew's. So this is a presentation, and please don't run away, about VAT on e-commerce sales and the latest reforms. Let me see if I can. Okay. So I need to introduce myself. I'm the co-founder of Taxmen. I co-founded the business in London in 2012, so it's 30 years now. And we work all around Europe and the US. We take care of tax and legal compliance for online stores. We have roughly 60 multinationals in our portfolio. We're based in London, but I grew up in Italy, as you can hear from my accent. So VAT is a very important topic for online sales. And the European Union has changed the rules in 2021. Basically, they simplified the application of VAT, and they are about to make changes from 2025, but especially 2028 and 2030. So the purpose of today's presentation is to go through quickly in a concise manner the reform that are taking place right now. So we first need to take a look at what happened in 2021, when there was a huge reform that changed the legal framework, the VAT framework for online sales. Before 2021, if you sold products from Greece or Italy to other European countries, you were eventually required to register for VAT in many other jurisdictions within the EU if you met specific revenue thresholds. So it was a happy problem. The more you sold around Europe to European consumers, and the more VAT registrations you had to apply for around Europe. So it was a happy problem in the sense that you had to register for VAT in other countries and bear significant costs. From 2021, the life is a bit more easier, in the sense that you can report VAT from your own country all around Europe by using a system which is called the OSS. Basically, if you're registered for VAT in Greece, you're selling from Greece to France, Germany, Italy, you will apply Italian, French, German VAT to your sales, but you will be able to report VAT from Greece. So every quarter you will have this form, and you will have to indicate your revenues in France, Germany, Italy, and so on. So it's a simplification. But still, and this is part of the reform that will take place in 2028, still to this day, you need to register for VAT if you're using warehouses in other European countries. So, for instance, merchants using Amazon FBA, the Amazon FBA program, if they use facilities in 7 European countries, they still need 7 VAT numbers because they all stock locally. Another simplification from 2021 is the introduction of the IOSS. It's a similar mechanism. If you are importing goods shipped from outside Europe to European consumers, and the value of the shipment is within 150 euros, which is the amount under which customs duties never apply, only VAT, you can report all these sales by using the import one-stop shop. So prior to 2021, you had the customs authorities of each country examining the parcels and applying VAT on the parcel. So it was a bit of a hassle for your customers. But from 2021, the process has been simplified for products, for shipments with an individual value within under 50 euros. So another interesting reform, which will be changed from 2028, is the reform that introduced the deemed supplier liability on marketplaces. So before 2021, if you were buying a product on a marketplace, it was the seller always liable to report and pay VAT. Then it came to mind to the tax authorities that it's actually easier to place the burden of reporting and paying VAT on marketplace sales on the marketplace itself. So from 2021, in two cases, the marketplace facilitating the sale of goods, the consumer sale of goods, is required to report and pay VAT on behalf of the merchant. I should say instead of the merchants. The first case is the importation of parcels from outside the EU with a value not exceeding 150 euros. So if you are buying a product on eBay and the product is shipped from China to Greece and the value of the shipment is within 150 euros, eBay will report and pay VAT instead of the merchant. And the shipment will go through the customs procedure quite smoothly because, as I said before, within 150 euros per parcel, there are no custom duties, and the marketplace will report and pay VAT monthly through the IOSS. Second case, consumer sales, domestic or cross-border within the EU, regardless of the value. So in this case, product shipped from Greece to a French consumer and sold through eBay, regardless of the value of the product, as long as the sale is a consumer sale, the marketplace will collect and pay VAT on behalf of the merchant. So you can imagine the challenge of implementing this reform. And now, because the reform overall had a successful outcome, the European Union has approved new rules that will slowly, gradually become effective. As it often happens when a reform is particularly complicated, the EU explain the reform in terms of pillars. So the VAT in the Digital Age package basically revolves around three pillars. Pillar one is invoicing and digital reporting requirements. The second pillar will concern platforms such as Airbnb and other platforms selling services, in particular transportation services. And the third pillar will increase the scope of the application of the one-stop shop. So very quickly, because I know it's tough stuff, let's start with invoicing. Invoicing was introduced by Italy 3 or 4 years ago. What does it mean in invoicing? Invoicing means that businesses are required to raise digital invoices and to submit the content of the invoices to the tax authorities. It's a brilliant way to monitor sales and prevent VAT evasion. And in Italy it was very successful, and Poland and France followed the same path. So now the EU is trying to, by one side, increase the application of e-invoicing and real-time reporting by one side, but at the same time we want to harmonize the use of the invoices. So up to March 2025, if one European country wanted to introduce mandatory invoicing, they had to apply for an authorization. This prior authorization has been now waived. From July 2030, and I think this is the most important part of the reform, all European countries will be required to implement cross-border business-to-business invoicing. So they will still be free to apply invoicing or not to domestic transactions, but they will be required to, how can I say, introduce and regulate cross-border business-to-business invoicing. And of course, the EU is setting down some basic rules that all European countries will have to follow. So the invoice will have to be raised within 10 days of a supply date or payment date, whichever is earlier. It will harmonize the content of invoices, and as you can imagine, because the content of the invoices will be submitted almost in real time to the tax authorities, some of the current filing requirements will be repealed. I don't want to be too much specific, but still to this day, most European businesses who carry out cross-border transactions within the EU, they need to file the EC sales list. This requirement will be repealed if invoicing becomes the rule. Something that scared merchants was that if invoices had to be raised one by one, but the EU will allow monthly summary invoices, which is good. And mostly important, in those cases where e-invoices is required, but no invoice is raised, the customer will lose the entitlement to reclaim input VAT, which is quite scary, as you can imagine. Pillar 2, the platform economy, and it's the same logic of the rules concerning the deemed supplier liability of marketplaces. I know that some non-European countries, they already require platforms to collect and pay taxes on behalf of an underlying supplier. It's a case of Airbnb in Canada, for instance. And it makes sense because it's easier for the tax authorities to monitor a single subject, the platform, instead of a multitude of hosts. So the platform will be responsible for charging and remitting VAT on short-term accommodation rentals and passenger transport services, unless the supplier provides the platform with a valid VAT identification number in the country where VAT is due, and confirms to the platform that they will end VAT compliance for the transactions. So it can become optional. Sorry, my mistake. It will become optional, the liability of the digital platform, only if the case where the supplier provides them with a valid VAT identification number. Spain has asked to postpone the application. Spain has asked to postpone the application of the new rules to January 2030. So, in most countries, the new rules will become effective from 2028, but some countries will be allowed, if they want, to introduce this segment of a reform from 2030. Another aspect is the liability of marketplaces will not apply to the case where the marketplace is a small and medium-sized enterprise. This is very technical, because small and medium-sized enterprises are subject to simplified rules in general. Another important clarification regards where it applies in the case of when a platform facilitates the provision of a service. VAT will apply, it wasn't so clear before, in the country where the service takes place. Another important clarification, the time for which businesses need to retain records, and in the case where they are subject to the dim supply rules, and it's 10 years starting from the end of the calendar year in which the transaction occurred. Because as you probably know, the time for which businesses must retain records of the transaction vary from country to country. So this is a good piece of harmonization. Then single VAT registration. This is mostly welcomed by Amazon merchants. From 2028, from July 2028, Amazon merchants will no longer be required to register in those countries where they hold stock. They will be able to use the one-stop shop, simplification I was talking before, also in the case when they use warehouses all around Europe. So this is Ecommerce Europe and various other organizations that represent merchants whose facilities all around Europe has been lobbying for the extension of the one-stop shop to the case of merchants holding stock all around Europe and not just in their own country. In this case, it's basically a technical aspect. When a merchant is transferring stock from one European country to another European country, right now they need to be registered in the country of destination and they need to report the movement of own goods. But from 2028, as I said, they will be able to report the movement of goods by using the OSS. So they will first report the movement of goods from one warehouse in one country to another warehouse in a second country, and then they will be able, which is a non-taxable movement of goods, and then they will be able to report the end consumer sale again through OSS. Finally, some European countries, including Italy, France, Spain, I don't know, Greece actually, they require no businesses established in another country, when they make sales of businesses established in this country, to apply reverse charge. It's a way to avoid foreign businesses from collecting VAT and then not reporting or not paying. It's an anti-fraud measure which will be extended to all European countries. So the EU will require all countries. I think probably half of the European countries still don't impose the application of domestic reverse charge. But from 2028, it will become mandatory. So overall, I think that the 2028-2030 reform will make life easier for cross-border merchants, and for the tax authorities, it should enable them to monitor and avoid VAT evasion in an easier manner. So it seems to be a win-win. Of course, we need to see how the rules will be implemented, and we need to see how businesses will react. We need to see the rules when they are finally in place. If you have any question, I'm happy to answer.
It seems that we don't have any questions. Thanks, Alan.
Thank you.
Thanks a lot.